Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we are interviewing Danny of CapitalCosm. How you doing, my friend? It's been a long time.
Hey, Darrell, I'm doing well. How about yourself, man? Thank you so much for the invite.
Yes, I'm doing good. There's a lot of concepts and topics to cover nowadays. There's no shortage of content, right?
Oh, 100%, man. Like it's unending. Sometimes you just struggle to, you do these interviews and you struggle to fit everything into the, 30-minute, 40-minute time frame because there's just so much stuff to unpack.
Yes, agreed. So, starting off, I would like to get your take on the economy in the United States. Obviously, there's a lot of things happening, and so I just want to get your overall take on the economy and what are you preparing for? How are you parking your capital? How are you positioning for whatever is going to happen within the United States economy?
Well, just simply based off of what the Fed and the government is trying to do, i.e., cut interest rates, i.e., these $2,000 stimmy checks, whether they're going to be checks or some other form of payment that Secretary Bessent alluded to, that remains to be seen. These 50-year mortgages, I mean, you wouldn't need to do all of these things, if the economy was in such great shape. It's like, it's like you go to the doctor and the doctor says you've got to wear a cast on your arm. Well, okay, why do you got to wear a cast on your arm? Well, it's because you broke your arm. So it's kind of the same thing there. Why is the Fed, why is the government so pushy on trying to pass all of these goodies? I mean, you did have an election a week ago, and the incumbent party got got was defeated, and the economy is always the number one thing here. People are struggling, and you look at the gold price. The gold price is going up, but it's really just a dollar losing its value. The DXY may be up, but that's just a basket of currencies relative to the dollar, primarily the euro and yen. So to answer your question, Darrell, I don't think the economy is doing too hot. You can see the tell in how they're trying to really push all of these goodies onto us. If the economy was really that good, they wouldn't need to do so to begin with. So in terms of what I'm doing what I've been doing for the last 2, 3, 4 years, and just keeping my eye on really the markets and sectors that are really going to be poised to take advantage of this monetary debasement that we're seeing that's leading to a rise in metals prices. Really taking advantage of what some have called this commodity super cycle that we're a part of now. You can see it in a variety of different commodities: lithium, copper, gold's been already making new all-time highs. Silver's made new all-time highs. Lithium's breaking out. Copper is on the verge of another all-time high. And you price the markets like the S&P relative to these commodities and metals, and you actually come to realize if you look at like the S&P relative to gold, for example, uh, we we haven't been in all-time high territory since 2000. So in terms of where I'm parking my capital, I don't think I'm going to be like saying anything, revelatory in terms of some oddball stock or anything like that. But it's in the metals, it's in the energy space. I think oil is one of those commodities, which is the master commodity, and you look at oil over time and you price it alongside, let's say, gold or silver, you'll notice that oil tends to be fairly correlated to the price swings of gold and silver, albeit in a lagged fashion, but it does happen. And oil still hasn't gotten that bid yet, still at $60, and it kind of takes me back to some people may hate me for saying this, but a George Soros quote, and that is, from the investing standpoint, always look for, I try to identify a premise that everyone thinks is correct, but is incorrect, and bet on that premise. And so everyone seems to think that energy and oil are just uninvestable at the moment. But I would say, I would contend that premise is wrong. Who knows? I guess, well, we'll see and find out. But that's really where I'm at, Darrell. So hope that answers the question.
Yeah, for sure. So I want to pull on a few threads there. One is let's actually start with oil. So there's been multiple competing takes on the job market as well as if we're in recession or not. The oil price would probably indicate that we are in somewhat of a recession. The economy is not healthy. But then, I'm hearing that the unemployment numbers are not as high as a typical recession would be and such. And so, I've been kind of wondering about that. Like, okay, is oil going to come out on the other side of this when we get out of whatever period we are in regards to the economy or whatnot? And so I just want to get your take there.
Yeah. I mean, definitely. I mean, that's a great point when it comes to oil. But again, we have to realize that with markets, it's a two-way street, right? Yes, demand can drive oil prices down, but supply can do the opposite if it's in dwindling fashion. So when it comes to supply, you sit in some of these conference calls of these oil and gas companies, and you see like you hear like their CEOs and their executives just buying back their stock at pretty profound volumes. And you ask them why are they doing so, and that's because they say, to meet some of these targets when it comes to these AI data centers, we just don't have the natural gas. We don't have the oil, we don't have the energy to meet all these demands. I mean, they are going to start dumping coal into this stuff. Like, remember back in 2022 and before that, and like 2022 and between 2016 and 2022, you had the big green energy push. Well, as soon as ChatGPT and large language models came on the scene in late 2022, those initiatives have been thrown out the window. Now it's like, get everything you can, burn everything you can. We don't even talk about CO2 emissions anymore. Just dump it into AI. And I think they're betting the farm on AI, on these data centers. And if what the CEOs are saying is true, and they're putting their money where their mouth is, they're buying back their own stocks, that would portend that the energy prices would have to, I mean, there would be a strong tailwind to move them up, just simply on the basis of the demand coming from these data centers, as well as the supply not being there to fully meet the expectations. And so, it can go a number of ways. I mean, the other side of the coin is that there comes a Jesus moment when it comes to these AI, to the AI thesis. Now, you recall back in 2000, we had the big .com bubble. Of course, the internet didn't go away after the big .com crash, but things did get a little bubblicious in 2000. And it could be the same thing today. I mean, these stocks may be getting themselves a little too ahead of themselves, and they have to come back down to reality. But the problem is they're pretty much holding up the entire stock market. Oracle, NVIDIA, Meta, the Max 7. So if you pull the rug from underneath those companies, it's probably going to take the markets down with them. And you're kind of left in this weird spot. The energy needed is not going to be, if this thesis is correct, the energy is not going to be there to meet the requirements of these data centers. And if that happens, a lot of the forward looking analyses of these companies are not going to be valid. They're going to have to bring down their projections, and as a result, their stock prices are going to come down. And if their stock prices come down, and they're going to take the rest of the market down with them. And so it could be a mixture of the two things. I think it's a decline in demand when it comes to consumer demand, but an increase in price on the supply side by virtue of the supply not being there. So that's what they call stagflation. So we had in the 70s, and I think and in that scenario, commodities always do well in that scenario. As metals always do well in that scenario. Now, is past performance always indicative of future results? Not entirely, but in my view, a smart man once said, history doesn't repeat, but it does rhyme. And by the way, that was supposed to be Mark Twain, but I recently learned that there was actually some ambiguity around that. Some people, there's some sources that say he actually didn't say that. So, but that's a tangent right there. But the phrase remains true. Yeah, go ahead.
Whoever said it was clever, whoever it was.
Yeah. Besides, everything else is besides the point. So, yeah, totally true.
Yeah, for sure. Okay, so you mentioned a few things there. You mentioned the abandoning of the carbon zero emissions initiatives and such. I know at least by the U.S. government. I've been kind of doing some research on this, and I love to hear your take in terms of. China has been consistently pouring into solar, which has been using a lot of the metals and the minerals that we invest in, especially when we look at silver and the solar demand, especially coming out of China. And then also looking at, the critical minerals and metals list, not to say that we're going to use those for our energy sources, but looking at okay, our grids need to be updated. Okay, we need lithium, we need rare earths, we need all of these things for our defense systems and such. And so obviously to get those out of the ground, you're going to need oil, to get those out of the ground. But I've been kind of thinking about, okay, is this initiative really abandoned, especially with the rise of nuclear and uranium and such? And it seems like that's kind of been like the natural gas and uranium has kind of been like the middle ground on the carbon emission free plus, pro carbon crowd, where it's kind of like they met in the middle in terms of, okay, well, nat gas and uranium, can be a base load power for these AI data centers. And so I've just been kind of doing some digging on each of those different factors and curious if you have any additional perspective there.
Yeah, there's definitely the China component to all of this when it comes to rare earth metals. And you look at what's been ongoing now with the Trump administration, and that is they're really trying to reshore everything home. They're trying to decrease their dependency on China, but it's proving to be much more difficult than they originally thought. And when it comes to the critical minerals list, they recently just added, I'm sure you know this, but they recently just added silver and uranium, and I believe copper, was that recently added as well, or lithium or something like that. But they're adding all of these new metals onto the critical minerals list. So something's happening in the backdrop that's really, lighting a fire under their ass to become to create a more independent country, or become less dependent on China here, so to speak. And I'm sorry. What was the question again?
Yeah, just your perspective on the. So we have the carbon emission crowd.
Oh yeah.
The energy crowd, and then the crowd that were like, hey, we're going to need carbons, and it seems like they kind of met in the middle.
Yeah, they met in the middle with nat gas.
And uranium has changed significantly. You and I, we've been in uranium, for a while and interviewing guests about uranium, and the whole sentiment has did a complete 180, right? Yep. And so, just interesting.
Yeah. So thank you for that. And by the way, you and I have been in uranium for a while. My background is my channel's color scheme is purple and green just because it had that uranium feel to it, right? So it's like that uranium glow. But be that as it may, so they did meet in the middle with nuclear and nat gas, but I think even by making those concessions into the agenda, there's still not going to be enough energy to go around for all of these data centers. And now that they want to expand into these more computationally intensive models, they're going to use up even more juice. And so it wouldn't surprise me if they start dumping things like coal into this thing as well, because it really does seem like this is their Hail Mary. They've got to make AI work. They've done way too much resources into this thing. The climate change stuff, the green energy stuff, they can kind of put that on the back burner, no pun intended. for now. But I think they really want to go hard on AI. And the problem with AI is, there's been a number of papers published on this. There's a recent paper published looking at these large reasoning models, kind of like DeepSeek is not a large language model, it's a large reasoning model. So it's a different type of AI, but nonetheless, it's a more cutting edge, supposed to be more efficient and an effective version of LLMs. And what they're finding is there is a point of diminishing returns when it comes to the relationship between the computational power of these AIs and the actual accuracy and output. So what that means is you can increase computational power by 2x. Does that mean that you're going to get 2x more accurate? Is your model going to get 2 times more accurate in the process? And the answer is no. Because what it appears to be happening is that there's a kind of a decay curve when it comes to these LRMs and LLMs as well. And so it kind of goes back to what I was talking about earlier. I think there is going to be a come to Jesus moment when it comes to these AI models. And a lot of enterprise companies, small business, the initiatives are all to adopt AI in frenzy and to build out their own AI. And I just can't help but think that I fully am behind the productivity hacks and productivity boosts that these AI systems give us. But I think what's also happening, and one of Meta's chief data scientists talked about this too about a year ago. And when I was working in the field as well, I noticed this too. But in data science now, you're seeing so many resources, so much money pour into studying LLMs and adopting LLMs and LRMs into these businesses, to the extent that other forms of AI, other forms of data analytics research and neural networks are being overshadowed by it. So it's really casting a shadow on all other disciplines within the AI sphere that are just as valuable, if not more valuable, than LLMs. And so it's also having this unintended effect of even stifling innovation in a weird way. Because now everyone's hyper focused on creating their own LLM, their own LRM, and computer vision. That's still a hot sector to be in the AI space, but it's not getting as much attention as it was, pre ChatGPT. These LLMs have taken up a large market share of the attention of these CEOs and executives, and so that's another thing to watch out for. That could indicate that we are in somewhat of a bubble-licious territory, as I said earlier on, but yeah, that's what I think. They did make these concessions when it comes to their green energy agenda, but I think there's probably more to come. It does seem like they're throwing everything they can at this, and that they're in a race for time. We're to get all these systems in place because I think you've interviewed the fourth turning author at one point, haven't you, Darrell?
Yeah.
And so you know about the entire premise of the fourth turning, and if you take it happens every 80 years, and it's been about 80 years since the last one, so we're probably in one right now, and so we're going to see a new monetary system most likely emerge in the next decade or so. Maybe I don't know when exactly. I've got 2 balls, neither of which are crystal, but they're building it. They're trying to get all this stuff done before the new system comes into place, and I think they're just going to throw everything they can at this thing. They're going to throw everything and the kitchen sink, like Elon Musk kind of alluded to when he first bought Twitter back in 2023 now, I believe. So, yeah, that's where I'm at.
Okay.
Our project is right in the southeastern corner of Wyoming. In the space of 4 years, fully engineered, fully permitted.
The ASIC is what caught my eye, $937 per ounce.
110,000 ounces per annum. First year of production is the most impressive. 132,000 ounces of gold, 24 million pounds of copper. You really want these things front-end loaded like that. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
So just thinking about the AI race between the U.S. and China, and I'm curious in your perspective. So obviously, when the recent flare up in the trade war with China, with the export controls on rare earths, and then Trump responded with the tariffs, and then they apparently came up with a year-long agreement and such, and China agreed to ease some of those export controls or whatnot. And so I was kind of thinking about, okay, if we're looking at it being a race, like who is the best jockey and who is the best horse? It seems like, in my opinion, China is very strategic, as well as, I mean, this is how they've gotten the leverage in the first place in any of these negotiations, and they plan in terms of 5 to 10 year plans. Our plans change every 4 years when we have a new election, and especially if there's a different party that gets elected or whatnot. I mean, we could look at, from Obama to Trump to Biden to Trump, right? That's a lot of change in initiatives and such, and where China has been consistent on their planning and their strategic direction, that they are going. And I've been kind of thinking about that, like, okay, who wins this race, right? And so you mentioned there being kind of a race for time, and this being like a Hail Mary to, get this thing going, because if AI would fail like that would be catastrophic, I think, especially with the amount of capital that is being thrown at it and such. And so just want to get your take on the race between United States and China, and what's your perspective there?
Yeah, so I think China, unfortunately for us Americans, has the leg up here. Number one, when it comes to building out AI, it's not about having the smartest data scientists in place building out these models, but it's also having the greatest computing power. That's important, but it really just comes down to, at the very bottom of the pyramid, it really just comes down to data. And who has the most data, right? Who's collecting the most data right now? I would say it's China. I mean, they have they have what you could call a surveillance state already in place there. They have, they data collect on the governmental level at a much more robust fashion than we do. I mean, sure, we've got the Facebooks, we've got the Googles, and all that other stuff, but with China, they've got a more robust apparatus to collecting data. And, be that as may, even from the personnel side of things, engineering is much more pushed in China. So, even from a talent standpoint, I would say that even China may have the leg up there as well. They've got over 3 to 4 times our population. And, their kids go to, they go to the STEM disciplines. We're a country of lawyers. They're a country of engineers. And, you couple those two things together, and, that's why I kind of say that I think that China has the leg up here, because they have the talent, they have the data collection mechanisms in play. We're kind of still scrambling, whether you like it or not. That's why I think they're implementing the Palantir system here in the United States government. It's mainly, I think it's a reaction to what China's doing. But I 100% agree with what you say. With us, it's always a matter of the pendulum swinging one direction and back the other direction. And it couldn't be more apparent, especially with what happened this past Tuesday. And it wasn't that long ago. About a year ago, Donald Trump won in resounding fashion with the support of Gen Z. And now you look at some of the crosstabs of these polls, and the Democrats won Gen Z by like 2x. I think it was like 51% to 25% voted voted in favor of Democrats within the Gen Z cohort. So what I think is happening is just people are just going from to, oh, the red team isn't cutting it, send in the blue team. Oh, the blue team isn't cutting it, send in the red team. And people are looking for a way out of it, but neither side can really generate a solution. They go from, one solution set from one end of the spectrum to the other end of the spectrum. Nothing seems to be working. Or maybe the public isn't giving it enough time to really work out. I don't know. But yeah, the clear vision, the long-term vision of China matched with the data collecting capacity and apparatus that they have in place, matched with their STEM encouraged culture, I think sets them up for success over us, unfortunately. And that's why I think we're pushing hard on, getting these H-1B visas. I mean, this time around January of last year, that was a big deal within the Trump movement, within the MAGA movement is, why are they bringing in all these H-1B visas into here? Well, I think from their perspective, they're just trying to grab the best talent across the entire globe in the most capital effective way that they can. Now, I know some people may argue that, but that's what they're thinking as businessmen, first and foremost. So yeah, I think for those reasons, I think China has a leg up here, unfortunately.
Yeah, definitely. Yeah, this comes back to, like what you mentioned earlier, the fourth turning, and then we know that these empires rise and fall. Ray Dalio talks about that a lot, and these 80-year debt cycles and such. And so, it's interesting to be seeing it in live time, being here in the U.S. And so, it's definitely truth that we have to grapple with. So just thinking about the metals. So I was wondering if you could pull up the charts and we could look at gold and silver on the charts, and what are you projecting moving forward? Where you see, where are we headed?
Well, I think the safe bet is, if you look at gold historically, this is a gold chart, and it seems like the safe bet is from bottom left to top right? Yeah. So in terms of where we're at today, gold is currently breaking. I don't know when you're going to post this interview, but gold is up 2% today, probably at the news of these so-called stimmy checks coming out. And I don't know when they're going to. I mean, they didn't really give a timeline and way of actually distributing these things, but yeah, gold ran up quite a bit within the span of a couple of months. We were just at 33.62 at one point at the bottom here in early August, and we skyrocketed up $1,000, over $1,000, 31% within 61 days. So it's no surprise gold needed a bit of a breather. You look at the route that we took. It was pretty much dominated by green candlesticks. There's a few red candlesticks here sprinkled throughout, but it was, the buyers had, the momentum was behind gold. And then 2 weeks ago, big sell-off happened we had a big sell-off from 43.70 all the way down to 41.07, a $200 drop in a single day. But what's looking good here is that it looks like things have kind of rounded out. It looks like we may have already bottomed out here already. And now we're pushing on higher when it comes to the gold price. And I kind of alluded to this earlier on, so I want to kind of just show you what I was talking about. So if you look at the price of oil and you put it side by side with gold, and we'll also look at silver here in a second, but I'm going to put them side by side. I'm going to zoom out. So you've got the oil price here in blue, the gold price here in yellow, and there's some correlation, it appears, between the two. It's not always nice and tight, but you'll notice that anytime we have these big divergences, there is a reversion back to mean. Now, the oil price is down here, the gold price is down here. it begs the question, is gold going to come down? Is oil going to go up? Or is it going to be a mixture of the two? I'd be willing to say that the chances are more like that gold keeps going up. That's just my view of things. If that's the case, then eventually the oil price, which looks like it's kind of bottoming here. I don't know if you can see it, but it does kind of look like it's forming this bottoming pattern here, and will begin its resumption up. Now, what's interesting is that if you look at the silver price, there's even a tighter correlation to oil. And yeah, I mean that's a pretty sticky correlation here. And you'll notice the last time we had a big divergence between the two prices was all the way out here in 99, and eventually the prices caught up to each other when it comes to silver. And also another thing is, if you look, and I haven't heard anyone bring this up, so I want to look at gold and silver on the same plot, and you'll notice something interesting. So I'm going to put in, you know what, I'm going to put in silver here, and I'm going to put in gold here. So it stays gold yellow. So gold is yellow and silver is blue. But let's actually make it white, just so it's easier to identify. And I'm going to turn off all the drawings. And okay. So yes, obviously there's a tight correlation between gold and silver. But the point that I'd like to make, and I don't know if it's the correct point, but I'll let your audience try to decipher this. But if you look at how gold and silver have tracked each other over time, let's take it all the way back to 1971 is when they took us off the gold standard, right? So that's a nice starting point. 1971, both metals skyrocketed to the upside, but it seems like silver had a little bit more juice to it relative to gold. And then silver crashed much more rapidly to gold. And following that, the gold price moved up to new all-time highs, while silver just kind of got close to its prior all-time high in the 80s. And so you fast forward to today, it kind of looks like they're moving now at the same price level. Because why I'm bringing this chart up is because people will often say that silver has lagged behind gold for 40, 50 years now. But what I would say to consider, this could be right or wrong, but I just haven't heard anyone bring this up, is could silver have moved up so far, so fast in the 80s that we see here, that gold has just been trying to play catch up the last 40 years? Because you see, the silver price here in white far outpaced the gold price here in yellow. And even though the gold price reached new all-time highs, it still didn't come into parity with the silver price rise of the 1980s. So what I'm trying to say, Darrell, is what if silver just moved so explosively in the 80s and in the 2010s that it really wasn't, it's not really, the takeaway shouldn't be that silver's has been lagging gold, but what if gold's been lagging silver? And now they've finally met at parity, because you can kind of see it here in this chart. So I thought that's a very interesting takeaway. I don't know what that implies exactly, but the fact that silver and gold are now at parity, I guess it would imply that gold has, or maybe silver is not as, it doesn't have that as much upside as relative to gold as people are saying. But again, you've got the gold to silver ratio to look at as well. But I like to kind of look at things that drive us out of the comfort zone of our headspace. When people get too comfortable thinking the same way, I like to kind of shake things up a bit. Now, the takeaway could be correct. The takeaway could not be correct. But I definitely, urge the audience to study these charts and to really get down to the bottom of it. So in terms of the metals, I think we definitely have more upside. It's classic cup and handle pattern. And we're right at the cusp of the handle, and by ergo the cup itself. So just based from a technical standpoint, I mean, I think the obvious destination is up, on the basis of just looking at this from a geopolitical standpoint. I think the tailwinds are unfortunately on the backside of both metals, as you start seeing the BRICS continue to press on with their settlement currency. No one knows when that's going to happen, but it's definitely going to have some sort of gold backing attached to it. And you still have the central banks buying up this stuff. And the central banks aren't traders. They're not here to make a trade and come in and out. I mean, they're not like you and I. They've got sovereign matters to concern themselves with, and they've got the best data. And of course, they're central planners, but at the end of it, they're the people who push policy. And if they think that they're going to push us into a war or they're going to push us into a new system, that's what they're planning. There's an old saying, don't fight the Fed. And this same thing kind of applies here as well. So it's kind of my take on the metals. I don't know if I answered your question in its entirety, but that's what I'm seeing. Oh, and one more thing. I actually pulled up these charts here. So when it comes to, let me see if I can share it. Okay, so this is Google Trends data. And I just want to take a glance at the search query volume of people searching out the term buy gold. If you're like an average person and you want to buy gold, I would presume you'd go to Google and type in buy gold or buying gold or something like that. Well, if you search the volume of this query within the United States, it looks like we hit an all-time high in the United States about a couple of weeks ago or so. I don't know why it's not letting me show it. Yeah, in July of 2025. And now we've come down a bit. This chart goes all the way back to 2004. But what's interesting is if you advance your scope outside of the United States and to the rest of the world is what's been buying up this gold from the retail standpoint. So, I would say this is a good mechanism to judge interest from a retail standpoint on buying gold. And the takeaway that I get from this is that the retail buying that is happening outside the United States. That's causing the gold price to rise. And so, but one counter argument one might say about this is that, when you buy gold, you don't keep searching buy gold on Google. So how do you control for that? Well, let's take a look at the term gold price. So if you're a gold owner, not just a gold buyer, but now a gold owner, I mean, I do this all the time. I go to Google, I type in gold price to check on the price, or I go to CNBC or TradingView or whatever. Gold price is extremely high, and this is within the United States. Now, if you search worldwide lens, similar story here as well. And you see a similar thing here with silver, buying silver here in the United States. It was elevated a couple of weeks ago, but nowhere near as elevated as the term buying gold. So, that could be a point for silver stackers is, gold may be the mainstream buy, but if you still want to get some of that, if you still want to buy something that's still not present within the public zeitgeist, silver may be the answer. Because if you look at the retail interest here in buying silver, it's still elevated, I would say, but nowhere near as elevated as it was in 2011. Nowhere near as elevated as it was in, I want to say, what is this, 2021 or something? Yeah, February 2021. That was the last silver squeeze.
Yeah, it was Wall Street silver. So a couple of points. You mentioned some really good points, and I'm glad that you try to find the contrarian view and such, so that you don't get caught in the echo chamber, which is easy to do, right? Imagine being in the echo chamber of the AI bubble, thinking that AI is going to continue on forever. So that the bubble is going to continue on forever. So yeah, that would be catastrophic. So just thinking about silver. So one thing that obviously when we're looking at the charts speak a lot. And then, but looking at that in terms of in comparison to like the fundamentals. Like sometimes the charts support the fundamentals, sometimes the fundamentals, kind of diverge from what the chart is showing, and then the chart eventually catches up. So, thinking back to silver in the 80s with the Hunt brothers and that whole squeeze that happened there, and many retail buyers were buying silver then too. The amount of demand that is industrial demand was not as great as it is now. And so even looking back to 2011, because I've just been looking at, okay, how much output are we having from the mines? How much are we recovering through recycling? And then also looking at the above ground inventories. And it looks like the industrial demand is growing so fast that the output and the supply is not keeping up or covering that demand. And so I've been kind of thinking about that. And when I hear folks say triple digit silver, at first I was like, these folks are crazy, right? Triple digit silver, I mean, I've only been in this space since, 2020, and I've been buying silver $20, silver goes up $30, comes back down to 20, trades in that range, gets to 32, comes back down, and everybody's all sad and everything. And at one point I almost gave up on silver.
Yeah.
I was just like,
it was like an old meme back in the day. Well, back in the day, I mean like 3 years ago. So when silver went to $28, like, oh, silver has made its annual pilgrimage to $28. Now it's going to come back home to 20.
Yep, exactly. But then once I started getting into like the fundamentals of like how much demand, I mean, including, silver being added as a critical mineral, the demand from the amount of solar, EVs, electronics and EVs and hybrid vehicles and such, it seems like the demand is like getting so great. And then the amount of supply we have being at that deficit, especially since COVID, in 2021, we've been at a deficit, pretty much every year. And so there was a projection from the Silver Institute that mine output for this year would pick up more, but it still wouldn't cover the amount of demand. And so I'm thinking that silver is going to rip a lot higher. And just interested if you have any take on that.
No, I think that's spot on. Another thing to look at is, I don't know if you've looked at fractals before, but what I'm going to do next is, so this is the gold price. This is the gold chart. And if you look at this thing here, I mean, we kind of formed a miniature, where is it? Not a miniature, but a cup and handle here in gold. Like here's your cup and here's your handle. I don't know if you can see that. But this is from 2011 up until 2023 when that cup and handle was broken. And so if I take this cup and handle pattern from gold and I copy it here, so I'm going to take everything from here all the way up to where we are today. So here's the chart pattern. So I'm going to take this, copy it, and then I'm going to paste it on the, where's this good silver? Here, okay, so here it is. I'm going to paste it here on silver. I'm going to juxtapose it. So remember, this is the gold cup and handle that we saw in the last 10 years. And if we just juxtapose this on the silver price and see where that takes us, this is going to get a little wild here, so strap in. So if you juxtapose it here like this, right? So I mean that kind of traces it, right? And it's good, that's it. So if we follow the same trajectory that gold's cup and handle did in 2011 to 2023, and we take that and we pose it on the silver cup and handle from the 80s up until present day, where would that take us? Well, according to this, it would take us up to $560 silver. And so why are we looking at chart patterns? I mean, is that really a predictor of things to come? Well, I mean, the charts are fractals of human behavior. price action is a function of the herd reacting to fear and greed. And so, yes, these patterns can repeat themselves over time through numerous assets, through numerous stocks, through numerous market vehicles. Because at the end of the day, humans are still humans.
Mm-hmm.
And so we react the same way. We react the same way to, we want to be closer to things that make us feel good, which make us greedy. We want to be away from things that create pain. That's fear. And so if you just juxtapose the same herd behavior that was exhibited within the gold price, within the gold market from 2011 to 2023 onto the silver price from 1980 to today, I mean, that would take you to some pretty astonishing. I'm not gonna say it's gonna get to $500 silver,
Yeah.
but this kind of makes me. I mean, if I'm a silver stacker, this chart makes me feel good. Let me put it that way. So
Yeah.
I mean, I totally agree with you. I totally think silver is has got jetpacks behind it. And you talk about earlier on that it's been placed on the critical minerals list in the United States. So they're going to try and get it. They're going to try to get as much silver as they need. And have to, no better customer to have than the U.S. government because their pockets are endless. They have, theoretically speaking, they don't even have a budget. I mean, they can just buy whatever they want by virtue of the printing press. So when I used to, this is an adage I would always hear is that, if you're like a contractor of some sort, the best customer to have is the government because, I mean, they don't have a profit motive. If they want to buy something, they're going to buy it. Doesn't matter the price. Price is not it's not an object, let's say. And so.
Yeah, for sure. So just thinking about gold and how it's performed so far, obviously it's doubled over the last couple of years, 2-3 years. And, I'm thinking about, we just hit over 38 trillion in debt.
Mm-hmm.
The money printers are coming back on. Money's going to get a lot easier. Credit's going to get a lot cheaper from the Fed lowering rates and such. Deficits are ballooning, right? I mean, even once the shutdown is cleared up, just even thinking about that, like, okay, well, how much spending is going to come out of that? Like, what's in that bill that's going to drive up more spending, right? And so stimulus checks, things of that nature, right? I was watching a video from Mark Moss recently where he talks about, when gold doubles, it signals, like historically it signals end of an empire and such. And we've had gold double in the last couple of years, 2-3 years. And so for me, I'm thinking like, okay, we could see gold easily, at $10,000 or more, especially if gold gets revalued. That's been kind of like an ace in the hole that has been spoken about in our circles and such. And so curious if you got any thoughts on that.
So yeah, the gold revaluation thesis has been around for a while, but Secretary Bessent has made some interesting comments favorable and friendly to gold. He even alluded to the fact that we had a gold standard in 1971. He spoke about it in a very glowing way. And there doesn't seem to be like this urgency to crash the gold price or anything like that from them. So, I mean, that could easily be a way to balance the books, at least momentarily from a temporary standpoint. Because, I mean, what's gold priced at today on their books? Like $42 or something like that? And so if they were to value gold at $42 to market price gold, let's say 4,000, let's keep it clean. I mean, that'd be a 100x increase in their gold holdings in the TGA. So, I mean, that would provide some relief for them on the books, but at the same time, it would also put a floor on gold because now. It basically implies that anytime gold gets below 4,000, the government can just buy that up. So why would anyone sell gold below 4,000? So in a way, it kind of creates a floor for gold were that to happen. And yeah, I mean, gold, I've talked to numerous other analysts about this. The good, my good friends over at North Star Bat Charts, they looked at this thing historically, and gold typically doubles 3 times. So 8x, 2 times 2 times 2, right? 4 times, 2 times 2 is 4, 4 times 2 is 8. And it's already doubled once. And so when it doubles again, 8,000, next time it doubles, it'll be 16,000. And yeah, I mean, those numbers won't surprise me because it's not really gold it's not like gold's become, some productive vehicle all of a sudden. It's really the currency collapsing. And really, when it comes to that, there is no limit. Not even the sky is the limit because, the currencies can collapse down to zero. And what does that imply? That implies an infinite gold price at that point. But yeah, I mean, the natural, gravity always pulls the currencies down, right? No matter how you look at it, the currency will always come down due to the gravitational force that is debasement. It's debasement gravity, let's call it. I just coined the term. So,
Yeah, for sure.
but yeah, I mean, I think 100%. I mean, there's so many tailwinds to this stuff that, I mean, not all this stuff has to come true. I mean, we only need like 1 or 2 of these things to come true, and that's more than enough to reap the rewards.
Yeah, for sure. And the acronym TINA, there's no alternative. I've really just been thinking about that.
And here's another thing. Why is a pet rock outperforming the market?
Yeah.
Like
Exactly.
a pet rock doesn't do anything. Like aside from jewelry, I mean, what other use cases does gold have? I mean, there really are no use cases. But what does it imply about the markets and the economy that a pet rock that does effectively nothing is outperforming it? Because gold is up 50% this year. The S&P is up, like 10%? Something like that. So, I mean, that's another warning sign. That shouldn't be happening. Like, why is a pet rock outperforming productive businesses?
Yeah.
that create value supposedly. So
that is true. Well, shoot, Danny, appreciate you for coming on the show and everything, and giving your takes, especially since you interview a lot of guests and experts in this. And so it's always good to get the takes of the hosts that are doing those interviews. And so where can the audience connect with you, find you, and all of that?
Yeah, well, first and foremost, I appreciate the invite here, Darrell. Again, it's always a pleasure talking to you guys. And, be sure to give my regards to Jay Martin as well. Where they can find me, I have a YouTube channel called CapitalCosm. I do a lot of interviews similar to Darrell. So, I think we interview a lot of the same people. So if you like the people that Darrell interviews, I've got a lot of the same people on my channel as well. So that's at CapitalCosm, CapitalCosm.
Okay, cool. And then you're active on X as well, right?
Yep. Same name, CapitalCosm, COSM.
All right. You can engage with some of Danny's controversial takes on X as well, you all, and also be sure to go.
I'm a good boy, Darrell. I don't go.
You're not going too far. But it's always good to hear some of those contrarian takes. And so be sure to go check him out on X as well as subscribe to his channel. And if you haven't subscribed to VRIC Media, I encourage you to do so as we're going to continue putting out content like this. Thank you, Danny, for coming on the show. Look forward to having you back.
Awesome. Thank you, sir.